Hi, everybody. Welcome to our webinar on Vindicia's Forrester Total Economic Impact Study of Vindicia Retain. It discovered that Vindicia can deliver customers up to 522% ROI. And we're here today with our Chief of Strategy, Trace Galloway, and our Forrester consultant, Ashley Cohen, as they comb over Vindicia Retain's Forrester Total Economic Impact Studies, methodology, key findings, and implications for subscription businesses who are interested in creating maximum retention and revenue. And now I'll turn it over to Trace.
Welcome, everyone, to the Total Economic Impact of Vindicia Retain study commissioned by Vindicia with our special guests, Forrester. My name is Trace Galloway. I am the Chief Strategy Officer here at Vindicia, and I'm very fortunate to be joined this morning by Ashley Cohen, who is our project lead and consultant from Forrester. One of the biggest challenges that organizations face as a part of their recurring business, right, is a strong retention solution. Lack of retention leads to a number of different challenges for customers, especially around loss of revenue, right? And of course, the contributing factor of passive churn, where you're attempting to bill people who are not indicating that they want to leave or stop using your service, but for whatever reason, you're coming across a payment-related failure, particularly against a credit card or debit card-based failure. Most organizations will attempt to use some internal efforts, but a real strong solution here requires you to have the ability to recover lost revenue, ensure that continuity of service for your customers so that they don't have to take any action on their side to save the subscription that they have in place. So Vindicia, we have a solution in-house today called Vindicia Retain. And this solution is all about helping us minimize and reduce to the greatest extent possible passive churn. And we've had this solution in market for many, many years. And we worked together with Forrester to commission a study where Forrester went out and spoke with many of our clients to determine what exactly is the ROI of using a solution like Vindicia Retain to help reduce the passive churn. And then, of course, the reduction of passive churn over time, right, will lead to a larger and larger subscriber base and more customers in your subscription offering. And so you can see the typical renewal levels on the right using kind of standard best practice retry, as well as the additional add that a solution like Vindicia Retain can bring over the course of time. And so we utilize a number of different insights and a number of different technologies to drive this higher level of retention for all of our clients. And I couldn't be more pleased to introduce again Ashley Cohen, who's going to walk you through this total economic impact that Forrester did for us. Ashley, go ahead.
Thank you, Trace, and it's a pleasure to be here. So, hi everyone. As Trace mentioned, I'm Ashley Cohen, a consultant at Forrester, and I led the total economic impact for Vindicia Retain. So the agenda for this section of the webinar will start with what is a TEI. So I'll go through what we did and how we did it. We'll next go into the executive summary, which will show a high-level view of the results of the study. We'll then take a look at the customer and the journeys they took to make the decision to invest in Vindicia Retain. We'll then do a deeper dive into the study's results and then wrap up with a Q&A. At this point, it's important to mention that the slides here is an abridged version of the study. So I would recommend that if you would like a full explanation of the methodology or the case study results itself, you go directly to the full case study, a link of which will be shared at the end of this webinar, or reach out to the Vindicia team. So what is a TEI? So a TEI is a total economic impact report conducted by Forrester that helps organizations provide a business case to justify their investments in certain technologies. So in this case, of course, it's Vindicia Retain. We look at the benefits, costs, flexibility, risk factors to form the basis of calculating the overall ROI of the solution. We take a 5-stage approach in doing so. So first we begin with researching the solution itself. Then Vindicia has chosen 4 customers for us to interview. And out of the interviews, we have outputs that form the composite organization and the financial model. Now, the composite organisation is an aggregate view of the 4 customers that we interviewed, and then we create a representative organisation that form the basis for the financial model. We then write a report, and then we go back to Vindicia, review and finalise the report. So the report should be indicative of the benefits other organisations should hope to achieve should they invest into Vindicia Retain. Now for the executive summary. We'll begin by looking at why is there a need for a solution such as Vindicia Retain. So many organisations are using subscription-based revenue models. However, with these revenue models, there is a risk that organisations can lose a portion of revenue. Now, there are authorised transactions, but for various reasons, transactions can falsely decline. Fortunately, by leveraging technology such as Retain, organisations can recoup revenue which would have otherwise been lost by technical billing errors. So our TEI report looks at the 3-year impact of using the solution, and at a high level, these are the results. So we have a fantastic 522% ROI of the solution. This has amalgamated into $24.55 million in benefits. And with costs for our composite of just under 4 million, it has left a net present value of $20.6 million. Now, when we spoke to customers spoke very highly of the value of Retain, extending beyond the immediate effects of the tool, but recognised that Vindicia had actually saved them 3 to 5 years worth of effort by doing this themselves. Looking at the customer journeys, we interviewed 4 customers of Vindicia Retain. So these customers tended to be enterprise level across a range of industries. We interviewed very senior people in the payments department. However, we did interview one vice president in the applications and technology department. Now, when we spoke to all of these customers, they transferred various volumes of transaction to Vindicia. So that made it clear to us that this was a solution that can be used by small to medium enterprises as well, with smaller transaction volumes. Now, there was consistency in the challenges all of these organisations were facing, which led them to make the investment into Vindicia Retain. So, first of all of them were suffering from a loss of revenue due to failed transactions. This led them to having a retention issue, so involuntary churn was occurring. And quite often, these organisations were using their own internal efforts to recapture failed payments, but they recognised that their repayment strategies were not in line with major competitors or industry leaders. Sometimes the methods that they used, there was limited algorithms or limited depth of data that they had as compared to Retain. And sometimes the efforts that they put in was very manual to recapture failed payments, hence needing an automated service such as Retain. So here are the key results, and we've split these results into quantified benefits and unquantified benefits. So starting with the quantified benefits, there's 3 key financial benefits that we have seen from the solution. First of all, we'll start with the recovered payment transactions. So there was a revenue uplift from recapturing the payment transactions that companies would have otherwise struggled to recoup themselves. There was secondly a profit from extended customer lifecycle value, which thus had a positive impact on retention rates and reduced involuntary churn. And lastly, there was an efficiency factor. So customer service and recovery payment teams had increased productivity and could pivot to more strategic activity. Moving on to the unquantifiable benefits, when we spoke to customers, it was clear that a benefit of Retain was the uninterrupted access to service for their end customers. And then also internally, their marketing and sales team could focus on net new growth, alleviating the time and effort that they would have had to spend recapturing formerly lost customers. There was a cash flow benefit here as well, so there was an improved time to money. And then lastly, customers spoke to us about Vindicia being deployed across many locations around the world and being able to recoup different currencies. So overall, when we discussed the solution with customers, they were very, very positive. And here we have a customer talking about uninterrupted service, which is particularly key for companies who provide products where their customers are dependent on a continuity of service, particularly here with security software. Now, to take a deeper dive into the study's results. So, in order to look at the study's results, we need to first look at how we created a composite organisation. So just a reminder of what a composite organisation is. So it's an aggregate view of the 4 organisations we interviewed, and then we create a representative organisation, which we use as a basis to do the financial modelling. In this report, our composite organisation had these key features. So Industry-wise, it was a software organization. Its revenue was about $3 billion. However, we chose that Vindicia Retain was used for its B2C revenue stream at $1.2 billion. It's important to note that Vindicia Retain can be used for B2B service lines also, but because of the interviews that we had, we decided that our composite was going to be used for a B2C revenue stream. The monthly subscription service cost was around $20, and it had a very good transaction success rate at about 90%. Now, it's important to mention here that our particular composite organisation had a cadence for recapturing lost payments, which was the first 2 weeks they used internal methods of their own to recapture lost payments. And then in the remaining 2 weeks, those particularly tricky transactions, they handed over to Vindicia Retain, which meant 3% of the total overall transactions was handed over to the solution. So looking at our analysis, we have identified 3 key financial benefits, by far the largest of which was the $16.6 billion of recovered payment transactions, which is great. Secondly, we saw the profit from the extended customer lifecycle value at $7.6 million. And lastly, but by no means inconsequential, was around 400K of savings for the customer service and recovery payment team. Now, having a deeper dive into the first benefit here, the revenue uplift from recovered payment transactions. All of the customers that we spoke to could attest to recapturing revenue that they would have otherwise struggled to retrieve themselves. Although many had their own internal methods of recapturing revenue, Retain gave them the confidence and the knowledge that using their prior methods, they were still leaving money on the table. And so from leveraging this technology for our composite organisation, they achieved $16.6 million back into the company across the 3 years. Now, speaking to the customers, on average, Vindicia Retain saved about 20% of failed transaction. But for our composite organisation, that equated to upwards of 600K per month. Our second benefit here is the extended customer lifecycle value. So for our composite organisation, the extended customer lifecycle value was on average around 5 months. So for 5 months, customers maintain their subscription past point of failed payment. However, this is a benefit that can vary from organisation to organisation and very much depends on the value and the desire for the subscription from the end user. As we're all aware, humans can make decisions based on emotion. So the value that they place on having a gym subscription, for example, compared to having a streaming service very much depends on their relationship with the brand and their desire for the product. However, it's important to note here that Retain can be used across the board for all different types of situations, because even saving inherently short life cycles makes a difference to an organisation's overall profit. So for our composite organisation here, $7.6 million was saved across the 3 years in extended customer lifecycle value, which therefore meant there was a reduction in passive churn. Now, this last financial benefit is the customer service and recovery payment efficiencies. This is also a benefit that can vary from organisation to organisation. However, all of the customers that we spoke to from Retain benefited from the solution because it alleviated time and effort spent for their own teams to recapture revenue. There are key variables that can impact the level of benefit that's achieved here. So the first variable is the size of the organisation's customer service teams, and the second is the level of effort required to recoup revenue. Now, the more manual the prior environment is, the bigger the impact of Retain here. So the automation for our composite organisation saved them around 400K. And of course, not everything that is meaningful can be measured. So it was really important for us to discuss with Vindicia's customers about the unquantifiable benefits that they gained from the solution. So there were 4 key benefits we saw here. Firstly was the continuity of service. Having an uninterrupted service for the end user was incredibly important for some of these customers that we spoke to. And in fact, it elevated the customer experience they provided to their end user. Also internally, as mentioned, their marketing and sales teams were not having to spend time replacing lost customers, but could focus on net new growth. And there was a cash flow benefit here as well. So there was an improved time to money. The speed of settlement was something that the customers did flag to Forrester about Retain in a positive way. And then lastly, global organisations that we spoke to deployed Vindicia across many locations and hence had to recoup revenue in different currencies. And they shared with us that this saved them time and effort from having to deploy unique payment strategies country by country and ensure country-specific compliance with payment regulations, which was something that they could hand over to Vindicia, and they felt confident that Vindicia could do this on their behalf. Now for the costs. So when we spoke to customers, costs were broken down into two specific categories. First of all was the licensing of Vindicia Retain, so the processing cost. And secondly, this much smaller cost was the planning and implementation. Looking at the planning and implementation cost here, there was two key factors. It was the time it took to implement, and then looking at who was involved in the implementation. So the implementation team consisted of a core team, which tended to be of developers, and then a supporting team, which was project management or operation. And then the processing cost here, customers shared with us that when they used Vindicia Retain, it was based on a revenue share pricing model. So the revenue share was dependent on the volume of transactions that was handed over to Vindicia. With any technology investment, there are variables that can have an impact on the level of benefit the solution brings. So we look at flexibility factors. We also look at the risks in terms of the impact risk and the implementation risk. So if we were to start with the flexibility here, at Forrester, we see flexibility as the opportunities that could arise from using the solution itself. So when we spoke to customers, they saw the opportunity of using partial custom payments. So in this case, we have a composite organization that have a monthly subscription of $20. Now, using Vindicia Retain, they can look into recapturing part of that $20, so perhaps 50% of it at $10. The customers also spoke to us and showed us that they really partner with Vindicia and rely on their expertise of the credit card world, and they could look into alternative billing solutions by using the knowledge and the expertise of Vindicia. Now, looking at the risks, starting with the impact risk, the level of benefit that organizations can gain from using the solution can vary. Now, it can vary for one of three reasons. First of all, it could be the geographical deployment of Vindicia. Vindicia can vary in levels of success in different countries. And also, the level of benefit that you can get can vary depending on the value end customers receive from their subscription, and also the effort that is put into in their prior environment of recapturing lost payments. Now, looking at implementation, with every technological implementation, there are variables there as well. So internal change management processes vary from organization to organization, as does an organization's tech stack. And also the appetite of how many transactions a company wants to hand over to Vindicia Retain, all of which can impact the level of benefit that an organization can get from the solution. All in all, however, when speaking to customers about Vindicia Retain, there was very positive feedback on the ease of implementation. Many noted the little disruption to back office processes when they were implementing the solution. And just as an overall summary, so our analysis of Vindicia Retain was extremely positive. And I'd like to remind you of the three key outputs on the right. So there was a fantastic 522% return of investment using the solution. This amalgamates to a net present value of $20.6 million. And companies can see to break even in less than 6 months. So the ROI was achieved in half a year approximately. Now, I'm going to hand back over to Trace so that he can wrap up, as well as host any questions that any of you may have. Thank you very much.
Ashley, thank you very, very much. Great job. We can't thank you folks enough for doing the TEI study for us. So just in summary, folks, right, the key benefits that were revealed by Forrester through this total economic impact study include extended customer lifetime value by up to 5 months based upon the composite organization and the clients that Forrester spoke with. People can go live in as little as 6 weeks. In fact, the average is roughly 6 weeks. We've had clients go live on the Vindicia Retain solution much, much more quickly than that. It's delivering tremendous benefits, right? Tens of millions of dollars over several years. A very, very positive ROI, as Ashley just mentioned. And I think one of the other sort of less quantifiable and tangible benefits is this improvement in customer service and continuity of service that you're providing for your clients. It provides a better customer experience. And in this day and age, customer experience is very, very important as you look to retain customers in your service. On the right here, you can see contact information for Vindicia. We'd be more than happy to connect with anyone watching this webinar who is interested in learning more about the Vindicia Retain solution. And that's the information there in terms of how you can get in touch with us. So at the end here, why don't we wrap up with a few questions? Are there any questions?
Awesome. So we have a couple questions from the audience. The first is the composite organization presented is considerably larger than my company. Okay. Given my organization's smaller size, will Retain still provide benefits for my business?
Yeah, excellent. So thanks for that, Vivian. That's a really good question. And I think I kind of anticipated folks looking at this thinking maybe your organization isn't quite as large as the composite. Absolutely. So the benefits that Retain brings, if you are experiencing passive churn or payment related failures for credit card and debit card billings for your recurring customer base, absolutely the benefit can drive a higher success rate for you for that total transaction volume, particularly for those terminally failed transactions. So we work with organizations of all sizes to use the Retain solution, help them implement it, and help them get just that additional benefit, right, that Retain can ultimately bring. It's another tool that an organization brings to bear on trying to get to that perfect 100% success rate in their monthly billings. So great question.
Wonderful. We have another question here, and it is, I think, directed at Ashley, our Forrester consultant. How can I use the case study to determine what my costs and benefits and ROI might be if my company invested in technology?
Thank you, Vivian. That was a great question. So effectively, you can go to the paper itself and look at the calculation tables. There'll be various variables, and you can implement your own figures from your own organization and use the calculations to guide you to build up a calculation for your own ROI. And you can use that as a basis to present to senior leadership as to the reasons why to invest into Vindicia Retain.
Got it. Yeah, that was a great question and awesome answer. I think this question is for both of you. In addition to ROI, what are other key metrics from the TEI study I could use to convince my leadership team that we need a technology program of some sort?
Yeah, so I'll take that one. Thanks, Vivian. And Ashley can contribute if she'd like. Obviously, the revenue is always important, right? But some of the other benefits that I illustrated earlier around continuity of service, less interaction or need to interact with either customer care or self-care that you have either in your app or available on your website. You're not asking the consumer to take action to resolve a billing or payment related failure that they're not aware of on the one hand, and clearly they haven't indicated that they want to stop using your service, right? This isn't active churn. This is folks that want to stay and keep using your service who are at risk to churn passively if the billing can't go through successfully. There's also that continuity of service and customer lifetime, right? That's a big benefit for organizations that have an expected average customer lifetime of several months to beyond several months, who maybe experience a payment related failure in month 2, in month 3 of a new subscriber's subscription. You've worked hard to acquire that subscriber and bring them into using your solution, and you expect them to stay around for some additional period of time. So you'd hate to lose them that way. So extending that customer lifetime and healing these failures as they occur over that customer's lifetime really provide, I think, tremendous value. We hear from our customers a lot that the idea of providing continuous service and that continuity of service uninterrupted, I don't need to reach out to my customer unnecessarily and let them know that there's some billing related failure, is of great, great benefit.
Thanks, Trace. I can build on upon what Trace has mentioned as well. ROI often doesn't show the entire picture. So to build a holistic picture when you're presenting this to your leadership team, it's important to look at factors such as the net present value, which would be really incredible to give to your leadership team. But also, as I've mentioned in the presentation, not everything that's meaningful can be measured. So Trace touched upon some of the unquantified benefits here, and they are impactful to build out the story as to why it's important to invest in a solution like Vindicia Retain. And also, we look at flexibility factors here that just adds to the value of having such a solution.
Terrific. Those are really great points. We have a question here. Can you please describe the TEI customer interview process in more detail?
Absolutely, no problem. So the customer interview process is led by Forrester. Vindicia chooses which customers we interview. These customers should have had the solution for at least 6 months and give us a really good details into the benefit that the solution has given to them. So we ask them questions around the value proposition. We ask them questions about the benefits that they've got in terms of a dollar figure, but also in terms of some of the unquantifiable benefits that they've experienced with the tool, and as well as their costs. So we have conversations with 4 customers, but then we use the details out of those interviews to form outputs and form our composite organization, as well as form the basis of our financial model.
That's wonderful. Yeah, that's a great application of what the results could be, and also how it's a tough interview process to really vet those customers out to make sure that we correctly analyze and assess Vindicia Retain. So great. Thank you for explaining that. And to bounce off that, where does Forrester source its assumptions for the model for the TEI study?
So Forrester is a research organisation. We do a lot of research. So we have really credible benchmarks that we apply within every single TEI. And for consistency, we apply the same benchmarks across the different TEIs that we conduct.
That's great. Okay, we'll give it a minute to see if there's any other questions from the audience. For the audience, feel free to type in your other questions into the chat. Okay, so we have one here. You also mentioned risks in the calculations earlier on. Can you speak a little bit more about that?
Absolutely. Thanks, Vivian. Good question as well. So essentially, in order to make sure that we have really robust, credible answers for the return on investment and the dollar figures we put against these benefits, we always add a risk adjustment. With every technology implementation, there's always various risks associated with it, which might mean that you might not quite get the level of benefit that the composite organization will get. So the risk factors vary from benefit to benefit, depending on how realistic it is to achieve that benefit. So for example, if we were going to dive deeper into the third benefit that I mentioned here, which is the customer service and payment team efficiencies, different organizations have different size teams, they have different processes, some are more manual than others. So whilst there's a 15% efficiency here for an organization that may have had their prior environment maybe a little bit manual and they've received efficiencies by investing in Vindicia Retain, an organization that has a very manual process, maybe perhaps printing bills and so on and so forth, who have an even bigger team doing that, may receive even higher level of benefit. And there's a risk adjustment we add there just to accommodate for those variables.
Terrific. Yep. And why does Forrester make risk adjustments to benefits? And how is that factored into the finalized metrics?
So just building off of my last answer here, it's in order to account for some of the variations from organisations to organisations as to why they may differ from the benefits that's written in the report. It makes it more robust and more of a credible story to add a risk adjustment factor. If you could just repeat the second part of that question there, Vivian, and I can get that answered too.
Yes. How is accounting for risk adjustments when you calculate the benefits important?
So yes, it's important to include that risk adjustment just to build the story, just to account for anything that hasn't been accounted for in the initial aspects of the analysis. So essentially, when you're looking at those benefits, there are reasons why an organisation would achieve those benefits, but as mentioned, there be variables that can impact the level of benefits. So that's why it's really important to include in the story. And really, it shows your senior leadership team that you thought of all the reasons why you can achieve a particular benefit and you've accounted for the risk factors. So that will be why it's important.
Okay, wonderful. Well, thank you everybody for attending. And this has been a wonderful experience seeing everyone. These are the key benefits revealed by Forrester. Vindicia Retain is a very impactful solution to any organization, as we've proved and shown. This is the contact for Vindicia Sales. Feel free to reach out for any additional questions and clarifications, and we hope to hear from everyone soon. This webinar will be sent out to all attendees here. Thank you, everyone.
Thanks, Vivian. Thanks again, Ashley.
No problem. Thank you for having me, Trace. Thank you, Vivian. Pleasure to be here.